Between 2017 and 2019, Ghana's entire financial world was rocked to its very foundations. We're talking about a banking crisis so huge, it basically erased a decade of growth in the sector. So today, we're going to break down exactly how it happened, why it happened, and, most importantly, who ended up paying the bill.
So let's just start with the headline number, the bottom line. The total cost to clean up this disaster was over 25 billion cedis. And that cost? It was covered by you, the Ghanaian taxpayer. Just let that number sink in for a moment. It really sets the stage for the massive scale of what we're talking about.
And in just a couple of years, 9 universal banks just vanished. Their licenses were pulled. Now, the really crucial thing to get here is that every single one of them was a local bank, an indigenous Ghanaian institution.
And you know, behind all the big numbers and financial jargon, there's a devastating human cost. We're talking about around 20,000 people who lost their jobs directly, and who knows how many more were affected down the line. So it all begs the question, what on earth went so wrong? Okay, let's get into it. Here's our roadmap. We'll start with the implosion itself, then we'll break down the 5 critical failures that regulators kept finding over and over again. After that, we'll dig into some specific stories from the collapse, look at the very controversial attempts at justice, and wrap up with the huge questions that are still hanging in the air today.
Right, to really get a grip on this, we have to look at what the regulators found. The Bank of Ghana, which is the country's central bank, went in and looked under the hood of these failed banks. And what they discovered was, well, it was a pattern. A disturbingly similar set of problems across almost every single one, creating this perfect storm of failure. And here they are, the 5 official reasons. First up, just terrible corporate governance, meaning the people in charge were either clueless or in on the whole thing. Second, and remember this one because it is the big one, related party lending. Third, the banks were dangerously undercapitalized. They just didn't have enough of their own skin in the game. Fourth, they were absolutely drowning in what are called non-performing loans. And last but not least, some of these banks got their licenses through straight-up fraud. So what is this related party lending I keep mentioning? Honestly, this was the absolute heart of the scandal. Picture this, the owners and directors of a bank using it like their own personal piggy bank. They'd hand out massive loans to other companies that they also owned. These loans often had no approval, no collateral, nothing. The money just walked right out the front door, and there was never any real plan for it to come back.
All right, so we've talked about the what. Now let's get to the who, because these failures weren't just abstract ideas on a report. They played out in some absolutely spectacular ways at some very big banks. Let's look at the evidence. And this is where the story gets a healthy dose of irony. The founder of uniBank, one of the biggest banks to go down, was Dr. Kwabena Dufour. He wasn't just some businessman. He was a former minister of finance and, get this, a former governor of the Bank of Ghana, the very same institution that would one day shut down his bank. He knew the rules inside and out.
So what happened? Well, according to the central bank, uniBank's own shareholders and their side companies allegedly took out an unbelievable 5.3 billion cedis in loans and other deals. And again, the reports say this happened with no board approval and often with no collateral to back it up.
And if you want a snapshot of just how bad it was, this quote from the Bank of Ghana's report says it all. 75%, 3/4 of everything the bank owned, money that belonged to its customers, had been siphoned off by its own owners. The bank was basically hollowed out from the inside.
And the result of all that? Well, by 2018, a mind-boggling 89% of uniBank's loans were classified as non-performing. In plain English, that means nearly 9 out of every 10 cedis the bank lent out was gone. Poof, it was never coming back.
But you know, not every case was so clear-cut. The collapse of Heritage Bank was different and very, very political. See, the Bank of Ghana didn't shut it down because it was broke. They shut it down because its founder was on trial for a totally separate fraud case, which, in their eyes, made him not fit and proper to run a bank. His defense? He argued he was innocent until proven guilty, and that the regulator had already signed off on his source of capital years before.
Okay, so that brings us to the aftermath. With such huge losses and what looks like clear wrongdoing, you'd expect justice to be served, right? Well, this is where the whole story gets even more controversial.
Let's just take the case of William Otto Essien, the founder of Capital Bank. He actually pleaded guilty to stealing and money laundering. He was ordered to pay back the state, failed to do it, and got sentenced to 15 years in prison. A huge conviction. But then, in a twist nobody saw coming, he got a presidential pardon on health grounds and was released.
And what about the uniBank case? After a 5-year trial, the state dropped all the charges against Dr. Dufour. Why? Because a deal was reached for him to pay back around 2 billion cedis. Now, the Attorney General's office was very, very careful with their words here, saying this deal didn't mean anyone was innocent.
So naturally, this raises a massive question, one that critics jumped on immediately. If you're accused of taking almost 6 billion cedis, but you get to walk away by paying back less than half of it, what kind of message does that send about accountability for major financial crimes? And all of this brings us to the big picture debates that are still raging years later. The dust may have settled, but the cleanup itself has left behind some huge, unanswered questions. First, was this whole thing really just about fixing a broken system, or was there politics at play? Critics love to point out that every single bank that failed was Ghanaian-owned, and a number of them had known links to the political opposition. The government, for its part, insists it was just a necessary and impartial housecleaning. Then there's the question of the regulations themselves. The central bank jacked up the minimum amount of capital a bank needed to have by more than 3 times, and they only gave them about 14 months to find the money. Some economists argue that this was just way too aggressive, and it basically sealed the fate of some local banks that might have survived with a bit more time.
And we have to come back to Heritage Bank. For a lot of people, this is still the most troubling case of all. Remember, the bank was closed down because of charges against its founder, charges that were eventually dropped. He was never convicted. So is it really fair to destroy an entire bank based on an accusation that was never actually proven in court?
And that leaves us with this final, frankly, chilling thought. When you see settlements being made and presidential pardons being handed out in one of the biggest financial scandals in a country's history, it forces you to ask, who really pays the price? The answer seems pretty clear. It's the 20,000 people who lost their jobs and every single Ghanaian taxpayer who had to foot that 25 billion cedi bill.